Great to have you back, Arnout. How are you? I think I've unmuted you, buddy. Yes.
Hey Dale, good morning. How are you doing?
Good morning, Arnout. How are things going with you? God, so much has happened since you and I talked. And
Right?
let me, yeah, let me ask you this. Did the decline to 4,800 surprise you from the last
Um,
time we were talking?
yes, it did. I think it's always good, right, to go back first. Hey, what we were saying last time
Yeah,
around,
yeah,
and but at some point when price goes below certain levels, then we are prepared.
right.
We always have a alternative in our pocket, and it's not never our preferred. And I looked at our video from February, and ideally we were looking for a little bit higher before a larger correction would occur. So we were aware that a larger correction would occur, preferably a little bit higher, and as we always say, contingent on holding above certain price levels, because that's the beauty of Elliott Wave. If
Yeah,
price goes below certain price levels, then your preferred view is invalidated. The market has proved you wrong, and or if the market has proved itself right. The market's always right. We're wrong till proven right. And that was the case. So here we had, this was our preferred view, a little bit higher to, I believe, about 6,300, 6,400 in the S&P 500. Well, we didn't get that. The problem was this quite overlapping price action that we had since December of last year. That was just really difficult to interpret. And I did share that we had the alternative that we did top already in February. So we had that one. Again, that was our alternative. At some point, you have to make a judgment call. And this was a judgment call based on standard Fibonacci-based impulse patterns. And unfortunately, the market decided not to follow the standard Fibonacci-based impulse pattern, but to actually follow ending diagonal patterns. It happens.
yeah.
That's okay. But let's see here. If I go to where was it? Somewhere March. Yeah, so mid March we updated our preferred wave view because by then the market had declined too much to really allow it to go higher. And
Right.
as you can see here, this is what we posted on FX Street, where I'm author for and post about once or twice per week on indexes, Bitcoin, and all that stuff. Sometimes individual stocks, where we're looking for a bigger correction, and we said, yeah, we have this larger top here now in place, and we should see a bounce and then lower prices. I think we were looking for the low 5,000s, somewhere around there. So that was mid March. We did get a very shallow bounce. That's the nature of bounces. They're a little bit unpredictable. They don't have to do 50 or 60% retracement. That's the kind of typical target you look for. And that's what you anticipate. You monitor the price section. Are we going to get that? Yes or no, right? We can't predict the future. Nobody can. You just go by standard textbook retracements
Okay.
for dead cat bounces. And then we would see lower. We're pretty certain we would see lower. So the
Okay.
general pattern is
Yeah.
good.
Okay. Yeah. So let's move away from
Yeah.
the mystery of history, which there is no
Yeah,
mystery
and then
anymore.
of course we got our infamous low in early April, and so we're now tracking a potential new impulse higher. So we don't have five waves up, and that's why we initially always label things as 1/A, 2/B, because we don't know if this is still part of a larger bounce or if this is the start of a new bull market. If it's the start of a new bull market, most likely we'll see five waves up. Though in this case, even three waves up would not be the end of the world because it could be part of a larger ending diagonal, which is comprised of three waves to the upside, three waves to the downside, another three waves to the upside, etc., till it completes five larger three waves. So we're tracking it. So we've just completed, we believe, this orange wave three. This was the target zone that we've had for our members for a while. And as you can see here on Friday, we tagged it really nicely, and futures markets are down. Interesting, the futures market, as soon as the market closed on Friday, just dropped 1% like that. For whatever reason, I looked for any news. I didn't see any catalyst. We don't need it. If the news will now
It was Moody's. Moody's downgrade.
oh, Moody's downgrade. There you have it. All right. Okay, good. There we have our catalyst. So we believe we're now in this potential wave four, and then another wave five, a potential wave four, another wave five. So this is the ideal Fibonacci-based impulse pattern for a larger first wave of the early April low. Um, let's see if we're going to get it. That's why we have question mark 4 and 5. We don't know yet. Some people say, well, it is a wedge. Some people say it's only 3 waves up. Yes, we can see that. That's what we're tracking. So we have for our members and everybody that we post on always these warning levels. All right, we can't predict the future. So if we start dropping below, for example, the first warning level, which is a blue line, we say,
Where's
that's
that?
when we get a radar lock, right? So we kind of look at it.
58.30?
Yeah, it's about 58.40, something like that.
Okay.
If we then drop below the second warning level, that is Monday's open. I think it's quite important. Monday's open, right? That's based on
Yeah.
the China deal, 90 days of no
Gap.
tariffs. Yeah, that gap is pretty important. Can it get filled? Of course it can. And then, of course, we ratchet down these warning levels. The lower we go, the most likely it is that, of course, this impulse pattern is going to fall apart. That's how we work. These can be used as stops, for example, if you're long, depending, of course, on how sensitive you are to drops in prices. We should also keep in mind that we've had pretty much a just non-stop, relentless upmarket since mid-April. And we've had, let's see, 1, 2, 3, maybe 4 down days. So
Yeah.
a little bit of red is really normal. So we expect ideally to market to top around this 200-day moving average, which is around 5,700, launch again to the low 6,000s, etc. Not sure yet. That's why we have question marks. We have to be honest, right? That we can't predict the future. People say with all certainty that that's the case. I'm going to present some data that actually says a new bull has started. So with 16% chance only to revisit the April lows. Now, with 16% chance of only revisiting the April lows, I think it's better to bet on more upside. But hey, maybe it's
Right.
going to take that route. Who knows?
Do you
So
have
bigger.
a wave structure that would take it to 7,500?
Yes, I
There it
have. Look at
is.
this.
There it
There
is.
it is. Whoops, there it
Yeah.
is. So
Yeah.
let's go back here to the 2020 low. This is the COVID low. We have that as a primary 4 all the way since 2018 here on your left-hand side of the screen.
Yeah.
This is a large, irregular, expanded flat wave 4. And then we have 1. We have 2020 as 2. And then we are now in this wave 3. So this is a potential larger ending diagonal. Bottom line is I am impossible to or unable, and it is impossible to count 5 waves up from the March 2020 low. Every Elliott waver knows that that is a 4th wave, and if you are objective, you cannot count 5 waves up. And markets move in 5 waves up. Then the bigger picture, they do. That's since the 1800s, whatever the stock market started. It's 5 waves up, 3 waves down. That's the bigger picture. And it's just impossible to count 5 waves up. I do not see it because of the large wave 2. If it's the case, we have to squiggle in a 4th wave that's been 2 weeks, and then we have a 2nd wave that lasted a year. That would be so off. I cannot comprehend that. So we really believe we're going to go higher, and several market breadths. We had the Zweig Breadth Thrust, we had the graph
Right.
thrust. The AD lines are making new all-time highs. Those 3 things tell us with almost the AD line tells us with 100% certainty that there is no bear market. So that's it. There's
That's
never
true.
been in the history of the stock market a bear
So the
market with a
AD
new.
is confirming before the averages even get there.
Yeah. So this is the AD line for the NYSE, and this one has actually been lagging the S&P 500. The S&P 500 AD line. Let me pull it up if I
Yeah.
can see it.
That was part of the reason
Has
for the sell-off was the poor breath going into the
Right.
sell-off.
Yeah. So we had this negative divergence, right? So we made a new all-time high in February, but BREF was not following, and that is a telltale. And then you have to watch, of course, price because BREF can always, correct itself back again. And as you can see here, this is what we got here in late April, and
Yeah.
it broke higher. This is the AD line for the S&P 500 and hasn't looked back. So it's a massive, this is the previous all-time high in late November. Massive new all-time high. If we then go to the AD line for the broader index, which is even a more comprehensive indicator, it just made a new all-time high. Okay, it just did. If we then go to the AD line since the 1920s, I can go back further in time, but this is the data stock charts has. We've never had a bear market with a new all-time high. Every single bear market, meaning like the early 2000s, the of course financial crisis, 2008 and 9, the 60s, 70s, the the infamous, of course, 1930s market crash. All of them had negative divergence that had to last for many months. We just make a new all-time high. So this start tells us there has never been a bear market. Does that mean there will be none? Most likely not. I mean, if you're going to
Yeah.
bet against 100 years of history, saying now is different, like now we have Trump. Well, we had Trump 4 years ago as well, so ain't no different. So um, there you
Ain't
have it.
no sunshine when I'm gone.
Right. Yeah.
Yeah,
So you've got that one, right? So and then we have our thrust event that, of course, been broadcasted on X and the news everywhere. And
yeah.
since the 1940s, we've had, I think, 19 thrust events before. If you then look at the performance of the market, how did it do? There were only, I believe, 3 out of those 19 where the market made a new low, which was somewhere in the late 40s, 2004, and 2015. And here you can see 3 other occasions where the market did drop 8%, 11%, 5%, but did not go below the low from where the thrust was made. So technically, you only have 3 out of 19 events where you make a lower low. So also that I wouldn't bet against it, right? If history tells you, well, it's not that we're going to instantly rally, because there are 6 out of 19 occasions that we don't instantly rally, meaning we won't look back. We're just going to launch, like for example, here in the 1980s, we just launch higher, and it's going to take many months before we even see a tradable corrective pullback. So that's really the statistics we're dealing with. And then we now have the graph breadth thrust, which is a little broader. Also that one, 100% of the time we're green 1 year later. The Zweig Breadth Thrust, I think 100% of the time 1 year later will be green. Those things, those are statistics that I like to add to my Elliott wave to come to a weight of the evidence approach. And then you go like, revisiting the lows, it's possible, but not very likely. And since we're dealing with probabilities, let's go with not very likely. I do
We'll take
have
a
it.
shock. We'll
Yeah,
take
take a
another
shot.
shot.
I
Yeah.
do have it here for as an option. It's still there. We cannot discount it yet, but it's not very likely. The statistics from previous events tell us it's not very
Where
likely.
we just undercut April's low before the turn. So S&Ps would be like 45.50
Yeah,
if
something
we
like that.
did it, right? Okay.
Yes. Yeah, it is possible, but also here, this is the Nasdaq 100, all the way in the far left corner is way 4, the 2020 COVID low, 1, 2, and I just cannot count 5 waves up. This is still 3 larger waves. I mean,
Yeah.
it's staring everybody in the face. Now the question is, how is then this wave 4 going to present itself? We
Resolve. Yeah.
resolve, right? So we've had so far clearly 3 waves lower. So the wave 4 can be completed because 3 waves lower is corrective. But we also know that a 4th wave can become protracted. So we had 3 waves lower. And then I always say, expect at least 3 waves back up. And that's just what we got. You can clearly see we've had 3 waves back up. So it is possible, but I have zero indication on a weekly time frame. Price needs to drop here for the Nasdaq 100 below about 19,500, which is last week's low. No, not last week's, 2 weeks ago. That's so to really start making a lower low, right? If we make a lower
Yeah.
low, that starts to indicate, and this is what we call the proverbial shot across the bow. That, okay, bulls, start being a little bit more careful. And of course, if you start cutting under
Well,
70,500.
maybe a bond route takes it there.
Yeah, it's
I
possible.
mean,
I'm not saying it's not possible. I'm
yeah,
just saying it's not very
I,
likely.
I, yeah, I mean,
Yeah.
if there was ever an excuse, uh, you know, having TLT break down under 105,
Uh-huh.
um, not 105, 85,
Yeah.
the major weekly support, I don't see anything underneath it till the lows.
Okay. Yeah, that makes sense. No, it
And
absolutely makes sense. Again, I'm not discounting it. I'm showing that there's
well,
possibilities that, and it has happened in the past. It's just for the stock market not very likely. We've had such
yeah,
strong, and again, the AD line tells us that it's not going to be a true bear market. And I've been hammering actually home to folks. This is an update I wrote on FX Empire on April 3rd, and I coined a phrase called BIMBO. BIMBO means a bear market is a major buying opportunity.
Okay.
Early April, we were already, okay, we're going to go to the low 5,000. So I said, take a deep breath, zoom out. No, it's no signs of a bear market. It's not been a bear market. And the AD line tells us there will be no bear market. And again, each bear market is a major buying opportunity to my members as well for my daily newsletter. It's if you have a little bit longer time horizon than the 5 minute, the 10 minute, the hourly chart, but look further forward, then this is a fantastic buying opportunity. History tells us, over the 100 years history of the stock market, that every bear market and every correction has been a fantastic buying opportunity. Well, people were fleeing the market as if it was end of days, but the current rally so far has proven those people wrong. I've been a buyer myself, and I'm not doing too shabby. So, and that's, I think, still valid. And now we're just simply going to wait for things to, take a deep breath, zoom out, always keep an eye on the big picture to settle down. The short term still needs to get resolved. Are we going to see 5 waves up, or is it only going to be 3? And again, if it's only 3, it's still not the end of the world. It could still mean that we're finishing a large ending diagonal from the April lows. But if I
Do
then
you
look at,
believe, Arnaud, that a weak dollar, meaning risk on, is dead?
I don't know actually. No.
Okay. I just thought I'd throw it out there. I know you look at a lot of stuff.
I
Because
do. Yeah, I haven't
basically
followed
it's
the dollar in a long
basic.
time.
Well, I mean that
Just
was
in general,
one of the casualties of
it
what
is. Yeah,
what
that's
just
true.
happened, and the
Yeah.
rebound was pretty anemic. Okay, I mean, and now it looks like we could go to new lows. So, are you looking at overseas markets that perhaps we're going to have a reversion to the mean
Mm,
between the U.S. and the world?
no,
That's
I
where the
haven't.
money's been going.
I maybe should look at, of course, international markets, because everything is connected to each other these days.
Yeah, the
So
dollar.
yeah, as well. There's so many things to look at. Unfortunately, I only have 24 hours in a day, and it's quite a lot to just be able to track the U.S. markets. But yeah, I
Okay.
should maybe give my members a international market update if I find the time for it. The thing is, I just went through a major restructure for myself. I smooshed all my services into one new newsletter, so
You
everybody gets.
smushed them, huh?
Yeah, I smushed them all into one
All
newsletter.
right.
I used to have all these separate services, an email
Yeah.
for the stock market, an email for Bitcoin, an email for the
Yeah.
ETF trade alerts. I put it all into one nice comprehensive PDF. Everybody gets
Cool.
everything, same price. And if you say, I don't
Sh-
need to read the other stuff, well, just you don't have to read page 1 through 6 to get to page 7. Just read page 7 if that's what you use, and everything else is a bonus. You get it for free. Use it to your advantage. If you don't, it's all for a
Yeah.
nice
Show.
$3 a day price, pretty much.
Yeah. Show people where they could get it.
They can get that at intelligentinvesting.market. And we now have a nice new daily newsletter. It's a PDF, so it will look like this. You get every page has pretty much S&P 500 has its own separate page. You get sharp charts, sharp updates. We're going to go all the way to all the 5 major indexes. We have, of course, the small caps, market breadth sentiment, just what we discussed. The cryptocurrencies, Bitcoin, very bullish on those. Very interesting here as well, as you can see. Maybe if we zoom in a bit, global money supply, which affect the stock market as well, is
Yeah.
going to rise sharply. We do Ethereum, and then of course we have our gold and gold miner updates. So it's very broad, and of course all the trade alerts, ETFs that follow the stock market, and most of our alerts have been long since late April. They might get stopped out today. We'll see. We're doing very well with individual stocks. Netflix, for example, we're up 20% since
That made
early
new
April.
all-time highs Friday.
It made new all-time highs. That ain't no bearish either, right?
Not really,
So
no.
all our trading systems have flipped to buy as well as additional support for a new uptrend has started, and we have crypto alerts. So you have everything, a very neat, convenient package available, $3 a day, and you'll get this 5 times per week. And we'll give video updates if the proverbial, you know what, hits the fan. Then we'll get on the video and warn our members intraday, of course, like, uh-oh, something bad is going to happen. But most of the time, you can capture it with a daily update. You know, I used to do these hourly charts or 5-minute charts, but the further I zoom in, the more scribbles you have, the more interpretation you need to do, and the more likely you are to get it wrong. And actually, just zooming out to a daily chart, you can capture it really nice. That's pretty much the granularity I want to go by. And then, you know, of course, also on X, right, at Intel Invest. And there I post stuff, not every day, but I try to. And yeah, so that's how we go about. That's how we analyze the markets, primarily, as you know, of course, either wave-based with a healthy dose of a weight of the evidence approach. You know, the other one is, of course, sentiment, seasonality. Seasonality looks great as well. It did have a low for early April, and then we should rally all the way into August. I wouldn't hang my hat on it. It's not always the greatest of the average pattern for predicting the stock market, but it kind of matches. It also here has now a little bit of weakness here. This time frame, as you can see, we should top out somewhere, last week. A little bit weak for the next 2 days, but the general pattern is higher. Maybe more weakness in June, a little bit June gloom.
Yeah,
okay. You live on the West Coast, you know June gloom.
Yeah, I know.
Right?
I love it. Yeah.
Yeah, it's really nice. And then, of course, you know, sentiment. It's still not too bullish. I just heard, I think Blake said that the Costco folks are buying, but on average, it's average now. And we've been extremely bearish for weeks, if not months. And it's interesting how bearish folks were. As you can see here, late April, and I just showed you, we were hammering already early April on the table, you know, bimbo, right? It's a major buying opportunity, but the average individual investor was extremely bearish up till late April, early May. It just kind of flipped neutral. And then, you know, if I see this statistic, it doesn't surprise me. How do they determine these, you know, individual investors, their view on the stock market? Is by their own analysis and judgment, 60%. Only 11% uses a newsletter like what we provide. If they had used the newsletter, they wouldn't have been bearish at the wrong time, because the AAII, as we know, is a fantastic contrarian indicator. Most of the time, it works pretty well for finding a bottom. And if people maybe used a little bit more of a newsletter, they would not be the contrarian indicator. But you know, that's just me. It shocked me when I saw this. I was like, what? I look at my own portfolio and then make a judgment on the stock market. I don't know if that's a healthy approach, but oh well, to each their own. That's where we're at.
Yeah, you're
Thank
a
you.
pro, Arnout. So, and Arnaud is very aware of risk management, which is key.
Yes, risk management is key. That's why we have these warning levels, right? That's the warning levels. We think we know the market. Well, it's always there to prove you wrong. And again, I showed it. Our preferred view back in February was for a little bit higher and then a bigger correction, with the alternative being the bigger correction is already here. But again, our preferred view got proven wrong, but we had warning levels that told us. And then, you know, by the time March comes around, we had already, of course, shifted sides, and we're very well aware that we would see a bounce. It was weaker than expected. That's okay. We still would look for much lower prices in the low 5,000s, and that's exactly what we caught. So overall, you know, when you are flexible and you use price and other indicators to make it all align, you get a pretty decent view of the market. You can't nail it to the cent. You can't nail every 5 minutes, but you get the general pattern pretty good. And if you can zoom out and take a deep breath, then you have some very nice patterns that you can forecast reasonably well within reasonable accuracy. If you know, somewhere around mid-March that we're going to bottom in the low 5,000s, and that's going to be 2-3 weeks later hit, I think that's a fantastic tool. It's just that, I think a lot of people always get too bogged down in the scribbles, and it sometimes seems like they think they can solve the big picture by looking at 5 minute charts, but
Yeah,
you
it
really
wasn't
can't.
easy to buy down there.
No, not. No, it's not. No, 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 no.
I
Absolutely
mean,
not.
I had a 4,800 target for a long time from up there in
Well,
a
you nailed
megaphone
it. You nailed it. So
but I didn't buy it. It was too hard for me to buy it down there.
yeah, it's tough. And I totally agree.
I
My
bought
strategy,
oil instead, but
yeah,
yeah. So it's always easier in the rear view.
of course.
That's why people talking about new contract highs and S&Ps. I wanted to ask them where were they in early April. So
Yes, yes, that's
right,
what you got to do. Yeah, and that's why I show, I do have the track record. I did hammer down that,
yeah,
okay, April 3 till late April, just, it still looks very good to us for a good signal. And then our, bullishness has been confirmed by these breath signals, where we then go, well, okay, this really starts to increase. Again, none of them can exclude steep corrections. We can easily go and see 10% correction from here, right? That's
yeah. Get
something.
a fib
Yeah,
retracement,
yeah,
gaps
and
underneath.
yeah, just
Yeah,
like you mentioned with the bonds, those things, all of them matter. That we cannot exclude. But bigger picture wise, these things start to suggest that for the long run, we look pretty healthy. And as I showed you, bigger picture wise, I still have a little bit of a problem counting already a completed impulse from the 2020 low. It still
well,
looks like part of a ongoing bull market.
what I've noticed during the decline and during stable periods, and even during the rally, the market does better with a steady to higher dollar than it does with the euro up 100 or cable up
Okay,
100.
yeah, yeah,
Okay,
I'm sure it makes sense. Yeah.
that's what I've noticed. So anyway, so I think we could get that option you're talking about because if the dollar decline is not a 1 day wonder and the bond decline isn't either, there's more downside dollar to 96 or something like that.
Hmm.
Where are we not? We're not, still just a shade under 100. Um, we'll see. When the dollar bottoms and starts heading, if it heads up, I wouldn't be short the stock market anymore. So I think it's weak dollar capital outflows from the U.S., which
Yeah.
is not bullish for stocks.
No,
Um,
no, and it makes sense. Like I said, we've pretty much gone straight up for three,
how
4 weeks in a
long?
row. So
How
on the
long do
stock
you think
market.
that last count, or yeah, this count that you have up here? Maybe it was a chart before that showed the wave five up there. The chart before.
Hmm.
Yeah.
This one,
Yeah. You have that going out until, does the
28.
time matter?
Uh,
28.
yes, it does. Yeah, yeah, it
Wow.
does. There was a major turn February 2025. I don't think the next turn is due until 26, something like that. So that could fit with this one. And after that, I think we have to go all the way to 2028. Yeah. So
Okay.
it
Wow.
could last for a while, but again, this wave four is not going to be doozy. This wave four is going to be akin to 2022. I don't think anybody wanted to be long stocks in 2022 until early 2023, when things started to look up. So if we see this wave four again, it's going to be pretty bad. Yes, for sure.
Yeah. But it's turning back up in front of the election.
Then it
That's
should.
what I'm looking at.
Yeah, that makes sense. Yes.
Yeah, the incumbent has a nice S&P chart to go campaign on,
Yes. Yeah.
right?
Yeah. 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 Yeah.
All
It's
right,
true. Yeah. Yeah.
that's how I
Yeah.
look at things sometimes.
Yes.
Anyway, Arnaud, great
That's a
catching up with
good
you.
view. Likewise,
Yeah,
Dale. Very, very nice. Yes.
and check Arnaud out. He's uh, transparent. Okay,
That's what we try to
so
be. Yes.
yeah,
Yeah.
and that's what you need. You don't need to be with a revisionist. So Arnaud Tertier, thanks, buddy. I hope you have a great spring. Here's his letter right here. Minimum, follow him on X and get to know him. And I hope your business has a great spurt of growth
Thank
ahead
you.
this summer, buddy.
I hope so too. That'd be great. I'd like to welcome everybody on board that wants to join and try us out. And if it doesn't fit fit, it's not something for you, then move on. No hard feelings.
Yeah.
All good.
So, all right. Well, I'll talk to you later in the summer, my trading warrior brother.
Sounds good. Let's see where we get in the summer, if I was wrong again or finally right.
Uh, you have a decent track record, man. You've been
I,
right
I,
about the whole bull market most of the time. So
Thank you.
anyway, that's a wrap, everyone. You could join the team in 13 minutes on the morning edge. Don't just count your pips, count your blessings, and put on a Moody Blues song today because the bonds have the Moody Blues. And I'll be talking to you guys tomorrow for Turnaround Tuesday. Don't just count your pips, count your blessings. And Tony, we do record these and upload them to YouTube if you're still around. We have a YouTube channel. Okay, see you everyone later. Good luck today. Adios. Thanks again, Arnaut.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.